Let's welcome on board then. We have with us Mr. N. Kamakodi, the MD and CEO at City Union Bank, joining in on the show right now to talk about how their earnings have been. Mr. Kamakodi, great to have you on Neetina. Wish you a very happy Diwali, firstly, from all of us. And it's been a happy one for you this quarter, right? In terms of the loan growth after a long time, which segment of your loan growth are pushing forward? And where do you think the growth is going to sustainably come in from?
Wish you all a happy Diwali. Actually, if you actually see we had a setback in the credit growth in the calendar year, financial year, calendar year 2023. But after that, from January onwards, the growth started coming back on track, and we crossed double-digit growth in June, and that growth is sustaining. And the entire growth has actually come from our traditional sectors like MSME, commercial, wholesale and retail trading, agriculture, gold loan and all. And we said we will be going for the secured retail in a small way, but it's yet to actually contribute for the incremental growth. And based on the available traction and visibility, we feel we should be getting to industry level growth rate by the end of current financial year.
Right. The other thing I wanted to ask about is whether it's fair to assume that the bank is going to be seeing growth rate above the industry levels in the coming quarters.
It's we are all working for that, and at least now the visibility for the industry level growth, which was not there for a few quarters, is definitely visible, and we will definitely take efforts to take it beyond that.
There has been a huge problem in terms of the liabilities. Are those issues getting challenged? I remember reading a report over the weekend which talked about that credit growth, the liability is now higher than what the credit growth is. What is the situation at City Union Bank?
No, actually, we never had that issue right from the beginning. We always had deposits to fund our growth, and mainly our source of strength had been retail term deposits. We never had any issue because of the non-availability of the liabilities in the earlier quarters also, when there was a big buzz in the market about that, and it is in a stable way, both assets and liabilities are moving forward.
Okay. Are you comfortable to grow your book now? You had consciously decided after 3 or 4, in last 3 or 4 quarters that you wanted to, in a sense, not accelerate beyond a point. Are you comfortable by getting growth back into your book?
Yeah, actually, like as I explained, we had some issues during the calendar year 2023. But after that, we have started to fire the engine back from the January, and things have come back to the double digit and getting closer to the industry level growth rate in terms of credit.
Okay. Do you have any exposure to microfinance? Because for most of the banks, the microfinance has been a challenge.
No, we don't have any exposure to microfinance per se. We don't do that business, and we have a very small exposure to whatever exposure to the companies. But we don't have any exposure or activity in microfinance per se.
About unsecured, how is that moving for you?
We don't have unsecured. We had always been focusing on the secured funding, particularly secured by the immovable collateral. Even on the retail front, whatever we said, we are always on the secured front for our asset side.
You don't have any unsecured exposure. How is that possible? I mean, you'll have some unsecured exposure.
No, it's right? Even it's in the disclosure. It is only 1% of our total loan book is on unsecured segment. The entire remaining exposure is on secured front.
Okay. What is your understanding of the demand for consumer and especially rural facing consumer? Real estate prices all-time high, gold prices all-time high. Do you expect that the retail demand for the second half of this year could be stronger than the first half?
See, basically, if you look into our rural branches per se, traditionally they had been all supported by the agricultural activities. and a significant portion of our entire loan book on the rural, it had been through the for agricultural sector, and particularly supported by the gold loan. And agricultural gold loan by sector is definitely doing well, and we are not seeing any what you call slowdown or whatever that is being spelt in the we are reading externally. It is as usual, like say, because particularly we are as a bank from the like say with a significant proportion of our activities from Tamil Nadu, where the monsoon is basically from the northeast monsoon, which is yet to begin. So the preparations for the agriculture is as usual, and we see things are going okay. No concern so far we are seeing, particularly in the overall demand or asset quality, particularly in the rural segment of Tamil Nadu, where our significant rural presence are.
So where is it that we can expect your asset quality to settle in at, and would 1 to 1.25% in the next few quarters as well? Do you think that's a fair assumption?
Yeah, already you might have seen the net NPA had decreased by about 25 basis points in the previous quarter, and it is coming down by about not less than 10 to 15 basis points every quarter in the last 2-3 quarters. We are seeing that visibility, and we should be closing the financial year with between 1 and 1.25% net NPA is our expectation at this point of time.
Okay, Mr. Kamakodi, great to have you on the show. Thank you so much as always for your time.
My pleasure.
If you like this video, then like, share and subscribe to ET Now.